Sandeep, we are pinching ourselves. We're telling us that this is unreal, but it is real. The markets are up 4%. It is the biggest gap up for Indian markets in its life. So magical things are happening today. Now, as a money manager, what changes in the way you've invested in the past and the way you will invest in future post election certainty and uncertainty going away?
So first of all, Nikunj, now it is endorsements of the policies which was followed by the previous government. So which clearly means that infra as a theme, manufacturing as a theme, PSU as a theme will continue. Okay. Now, what is very important? Many such names in the within the PSU space or certain manufacturing space, particularly in the cap goods side, they have become very expensive. Now, what we have to look at, what could be the policies of this 100 days, 3 years, 50, 30 years, all those policies announcement, I think will become vital now. And I think everybody will like to wait for the budget, how policies unfold, because we have seen a massive gap. It is very difficult for us as an institution player whether we like to chase this thing or generally we don't. Okay. So what is very important, what could be the next trigger, which are the new sector which can emerge. Obviously, if you read the prime minister's speech of his interviews for last many months or so, particularly during the election phase, you do get some perspective.
New things
Excuse me.
which, what are those new things which you think could be the standout gainers of Modi 3.0?
One is when I talk about infra as a large theme, I think railway could be a very important thing which they have talked about. Energy could be a very important thing. So far, we have seen power. I think the continuity of that space will continue. Anything related to storage aspect on the energy we were talking about, and maybe a lot of speculation is going on. The taxation related changes coming, the GST will be part of these things. So I like to wait and watch. But these are the areas I think where under ownership is very meaningful. Look at this defense versus the railway. Defense, where the over ownership we have reached. Okay, railway still under owned, capital goods over ownership, but larger infra still under ownership. So I think that's a way we will try to filter this thing, and try to look for a opportunistic move rather than saying that everything looks very attractive to us.
Absolutely. And Sandeep, good morning. What a historic day you're joining us today. But tell me, I'm guessing in your PSU funds, you would increase then allocation towards railways, right? Or you've already been doing that?
We have been very bullish for railway for actually right from September 2021. We have a very sizable exposure in some of the companies. We are very meaningful stakeholder in most of the government companies. Actually, we are the largest shareholder in some of the companies of the government itself. So that level of exposure we already have. Maybe closer to this event, we have partially pruned down in some of the expensive names, particularly in defense space. But we remain very constructive. I think this is an area one don't have to look at just 1 year perspective now. Okay, if something's changing, and what is very important for us to understand is the not only historical moment right now. I think something has changed India from a very longer term perspective. When we talk about the perception analytics, how the perception of India in absolute terms is extraordinary, relative terms is even better. So if you really look at from that way, I think this is a not only this decade's opportunity, I think it could be few decades opportunity. So we have to keep in mind whether manufacturing or infra or some of these themes and government emphasis so much on the railways, okay, will lead to re-rating of these sector further. So I think what is very important to understand with this government coming back on the third term with this sort of majority, what the exit polls are indicating, I think the India P multiple will expand further. A lot of FIs have exited India, highlighting that India has been very expensive related to other emerging market. I think they will be forced to come back. Okay, and I'm using the very strong word. They will be forced to come back when they see this outperformance continue and the P expansion. And they themselves, their inflows will actually further increase the P multiple of this overall India as a basket.
Interesting. And Sandeep, aside of the names that you mentioned, which is, your PSUs largely, infrastructure, defense, railways, what else is going to participate in this mega India PE expansion that you talked about? And I'm guessing, the traditional favorites, banks also would have to participate.
See, logically, banks are also beneficiary of, if you talk about economy does well, then leverage economy stocks particularly should do very well. And some of the private sector banks have become very attractive after massive underperformance for last few years. So I think that's an area also we have turned for constructive, okay, purely from the opportunity point of view because they are very attractive relative to the market and relative to the even the sectoral benchmark. They have corrected a lot or consolidated a lot, and they reach, I will not say most hated zone, but they reach that neglected zone where people have sick and tired of this space underperformance part. And I think that's an opportunity. And we have also increased our exposure in the sector last month.
Sandeep, what happens to global denominated sectors now? Metals, IT, pharma, could they take a back seat as policy related stocks occupy more and more center stage?
So maybe from a very near term perspective, there's a possibility that they are on the backseat if you really look at today. But one has to look at the larger piece. So let's say we have been very bullish right from last year. We've been talking about how 2020 belongs to metals and mining. I think it's a global call. It's not about just India-centric opportunity. Maybe India will be more because I think a lot of policy-related changes, particularly in the mining policy, people are expecting that post-election and post-budget that policy should come through. So that could be additional local trigger which could be there. But if you look at from a global perspective, whether it's China, we are constructive. We talk about Australian companies or okay. So these are the areas where commodities as a country, if you look at asset class, I think something has changed. We have been talking about world is gradually moving towards real economy and the leverage economy as a concept. And that's the reason we launched our commodities fund last year. We think commodities is now in secular bull run. So if you look at the larger thesis, because a lot of people have felt commodities is something which is complex, commodities only. So I think some further re-rating of commodities company, commodity as an asset class will happen globally. And I'm not talking about just 1 quarter or 2 quarter story. I'm talking about much larger thesis if you have next few decades perspective. I think commodities as a sector will get re-rated globally.
And Sandeep, morning. What's the outlook as to where one stands when it comes to the entire defensive space? And, what would be the outlook on the traditional or the classic FMCG pharma sector? Does one look at these spaces to cushion the market volatility?
So, if you really look at consumption as a theme, I think we were relatively early in spotting that direction is that cycle has also bottomed out. Most of the consumption names have had reached the neglected area which we generally look at. And what is very important that rural economy speaking, a lot of high frequency data is showcasing the early signs of rural economy. I think these are the stock which has underperformed the market for a while. So I think I would like to have a very constructive thing in our portfolio and it gives you a lot of stability. So it's not about just the defensive. I think it should be a growth opportunity going forward.
Uh, Sandeep, so let's look at another sector which is a powerful sector, real estate. The real estate sector is on a multi-year cycle. Assuming that we are in for policy stability, recovering the rural economy, expenditure cycle will continue. Do you think real estate as a cycle and real estate stocks as a category will continue to do well?
I think we were very early in spotting the space for 2 years back. So we are equally constructive, but I still believe that even the real estate as a sector definitely constructive. But the easy phase of bull run is over there also. So you are in difficult phase of real estate. So that each and every stock which has performed very well will not do like simple every entire sector has done extremely well in last 2.5 years. I think that phase is over. Now it has become very stock specific opportunity and one has to be quick in optimizing or booking profits also because they are now slightly stretched. We are not negative, but we are not as constructive as we were 2 years purely from returns perspective, not as a sectoral theme.
Sandeep, what happens to the macros now? Bond yield, currency, if they become stable, can this also fuel further impetus and there could be more P expansion? Because when macros are good, it typically changes the perception. Perception changes, P multiple changes.
So I think if you really look at from a global perspective, if I have to combine these things into one data points, let's say liquidity and risk appetite, because these are largely macro data and these all data which you know this part of this so look at. So if I have to look at purely from India centric, let's say, okay, so India risk appetite is actually still rising. The good liquidity is still rising. So India is in a relatively better opportunity relative to the world. But if you look at the US market, particularly, my biggest worry right now is US market. I think that's the area which we are seeing some sort of risk appetite cycle. They're reaching the upper end. So I'm slightly more cautious on the US market. The VIX levels are very low. Some amount of complacency is getting built. I'm not negative, but I'm cautious on those markets. So particularly the US market, I think I'm more cautious than the Indian market. I will look for a India-centric opportunity rather than US-centric opportunity.
Sandeep, if one has to, let's say, pick up a sector for next 3 years out of the quant, quant family of mutual funds, which is one sectoral allocation you would recommend?
So I think the entire, as I said in the beginning, infra is a very large thesis, okay, but infra becomes very broader call. So within that, I think we like power as a space, which we do very well. Within infra, I think metal is another area which still continues to perform very well. And if you look at other things, that manufacturing, the challenge is that it has to be very, very stock specific because most of the manufacturing space have moved up significantly, and they are it's not valuations are not really justified to look at from the current level. But I will look at stock specific opportunities. So I will say infra manufacturing is a combination, is a great opportunity. But in the beginning, also I talked about that easy phase of bull run is over. We are in decisive bull run, but we are in a difficult phase, and hence one has to be very selective in terms of stock specific movement. Will be more important than looking at the larger thesis around.
Okay, Sandeep, great having you on the show today, and I hope the party continues tomorrow as well when the actual verdict is out.
Correct. Thanks a lot for calling us.